Now, I almost can't even believe the article, the headline I saw at Zero Hedge. Like, I said, this can't be real. There's no way this is happening right now. But then I realized something else. Well, first let me read you the headline. Again, back with Canada and its absurd housing market that started to crash, at least in Vancouver. Now it's back up. The Vancouver housing bubble is back. And it's almost bigger than ever. What? How? They just added the 15% tax stuff to it. The Chinese are still coming in? They don't care? Guess not. But then I thought about that. Well, why would they still do that? Why would they want to buy that stuff up so bad? So awfully bad that they're going to pay these absurdly high prices, way above market. And the government's going to charge us this extra 15% tax every year. Whatever. We don't care. Fine. What would make somebody do that? And say, let's keep doing that. Hot, hot, hot money is. Or we have a lot of money, whoever we are, and we know there's a big market crash coming soon, and we got all this money. We're the guys in the know. And we got to put it somewhere. And we are also the guys in the know that are part of the big club, and we can't go and dump it into precious metals because that'll cause all of us big problems. Precious metals is bad for all of us bankers. We don't want people going to that. It's a competing currency. We don't want to even touch that, so we can't put our money into that. Although JP Morgan's collecting physical silver left and right. Maybe that's the exception for some reason. But all these top people, big people, got to put our money somewhere. Put it in real estate. Put it in a house. Someone's got to live. You can rent it. You can live in there. You own it. Sell it later. You save. You put your money in there. Can't go to zero. And if you know a big market crash is coming, you'd be in a hurry to unleash that money, wouldn't you? Let's get as much as we can. Well, we started to put it in Canada, sir. Vancouver, especially. High-end housing. We got to buy the high-end stuff because you got so much money to unload. We paid way overpriced. We actually had a bidding war with somebody. We won the house anyways. And we got a lot more left to go. Well, hurry it up. Just keep buying. Keep buying. We don't care. Keep going. Why? Because a market crash is coming. And we got to get our money out of that system and put it somewhere else as fast as possible because we in the know it's going to happen. And that's why we don't care about these exploding high prices. Started to crash. Nope, never mind. Back up. For a while, this is Zero Hedge. For a while, it seemed that the Vancouver housing bubble, the direct result of a relentless tidal wave of Chinese hot money, had burst after last August the British Columbia province implemented a 15% property tax to stem the inflow of offshore funds. And indeed, in the immediate months that followed, Vancouver's housing price tumbled from record highs. However, it was not meant to be, and less than a year later, the Vancouver housing bubble is back, and it's almost bigger than ever. Now, what was I going to say? I had it, and I was like, you know what? Let me just finish that one sentence. And then I forgot it. So I'm going to read the previous sentence and see if I can pull a rabbit out of my hat. Hot money had burst after last August. Okay, see? Knew it. Got it. Do you remember the Webbot report said in the future, and I've mentioned about 2 or 3 times now about this, if this happens and anyone pays attention, send me realistnews.net, go there, hit the contact, JSNIP, Webbot hit. And that is this. Hold on. And that is this. If you hear any story of Chinese government, official, etc., on another continent, on another country, like Canada, US, anywhere, Australia, outside of China, basically, and the story is that they're there to collect property that one of their citizens in the homeland thought they owned, and the government found out that it was used to launder money, they laundered money, or they escaped capital controls, therefore you broke the law, so this house is no longer theirs, we're coming to repossess it ourselves. It's our house now. It's the property of China. And you can almost see this building. All this hot money from China is coming in there. They've got capital controls. They're trying to stem the flow of money outside of China. Bad. The government is over there. And it doesn't matter. It's finding its way right over there. Canada, in the U.S. too, Australia as well, and I'm sure everywhere else. So this wasn't exactly news when the webbot first said to look for this. Now I think I know exactly why those Chinese officials will be over there repossessing these houses from the people who owned it, paid cash for it. You know, in the other country, they paid for it. It's full. You know, there's no lien on it, no mortgage. It's paid for. But now it's the government's, China. This, I think, fits the bill. So I'm expecting, especially after seeing this, now it's this stuff's in the news. This wasn't in the news when Webbot talked about it, so I would have never even come to this conclusion. But now that I've been following this for a while, especially this year, because that's when it really started happening with this hot money in Vancouver, real estate, all this crap, I think this is going to be the trigger. It's going to get to epic proportions, and the government's going to crack down. The Chinese government will. And they're just going to ask the constituents, or their, friends, if you will, not constituents, in Canada and the U.S., who owns these houses? Any Chinese citizens or fund that can let us know who it is. And then they're going to track it down. Okay, yep, illegal activity, money laundering, whatever, we're going after you. So my question is the Chinese government going to then say, everything we find, we're just going to put on the auction, highest bidder to the U.S., have a nice day. Why would China, the government, want to hang on to the house here if they just repossessed it from one of their citizens? What are they going to do with it? To me, they're going to sell the house, take the money, and say that's ours, back homeland, because we were trying to stop the money from coming out of here to begin with, but you skated that, bought the house, now we're going to sell the house to get the money back and put it back into our country. That makes sense to me. So, over the past few months, with many suspecting, as we did, that the housing market in Vancouver had finally normalized, attention shifted to what emerged as the next hotbed of rampant housing speculation in Canada, Toronto, where last month average selling prices surged by 33%. What? And now it turns out, ignoring Vancouver and underestimating the persistent and aggressive Chinese buyers, turned out to be a mistake. Because earlier today, the Real Estate Board of Greater Vancouver announced in its latest monthly report that while home sales in the Vancouver housing market had predictably slowed down in April compared with a year ago, prices, which had dipped slightly in recent months, once again surged. First, the somewhat good news. The overall turnover in the Vancouver residential market slowed down appreciably, with property sales in the region totaling 3,553 in April of 2017, which is a 25.7% decline compared to April of 2016, when 4,781 houses sold, and 0.7% decrease from the 3,579 sales recorded in March 2017. Sales of single-family homes in April 2017 were hit the hardest, reaching 1,211, a decrease of 38.8% from the 1,979 detached sales records or recorded in April of 2016. Meanwhile, sales of apartment or condominium properties reached 1,722 in April 2017, a decrease of 18.3% compared to the 2,107 sales in April 2016. Yet, while sellers and buyers were less likely to agree on a closing price than just a few months ago, that does not mean that sellers were more aggressive or that prices had declined at all. In fact, quite the opposite. The benchmark for all types of residential properties in Metro Vancouver, Canada's most expensive real estate market, was $941,100 Canadian dollars in April. That's the equivalent of $686,500 in U.S. currency. That was up 5% over the past 3 months and 11.4% compared with a year ago. The breakdown was even more stark by category. For condominiums, the bench price was $554,100 Canadian dollars last month, which is a 16.6% jump over the past 12 months and 3.1% more than March, 1 month ago. $554,000 for a condo? Remember the whole condo story here in America? Some videos I was doing earlier this year. These builders, Miami, they're flooding the condo market. Now they're sitting on them. They can't fill them, and their profits are collapsing, and their fees they have to pay per square foot and all this crap is eating them alive. And the Chinese are not only buying houses, they're buying condos. Oh, you don't go out and buy a condo. Maybe in the 80s or 90s you did. Not anymore. You don't get a condo. And I hear some of you right now, oh, man, I got a condo. Well, excuse me, I got to keep it real. You don't go and get a condo. The benchmark price of an attached unit was $701,800, 15.3% more than a year ago, and a 2.4% increase compared to just March 2017. The benchmark price for detached properties was $1.5 million, an 8.1% increase over the last 12 months, and a 1.8% increase compared to just March. In the visual testament to just how strongly the Vancouver housing bubble has returned, and as of April has almost surpassed last year's all-time highs. Just in case you want to look at that chart, I'll pull it up for a second. Detached, condominium, attached, and apartments. I mean, let's be real here, right? 1977, what a great year. Jason Ip was born in 77. 1980, up this big boom, remember? But up. Now this is Canada. Canada. And it's interesting to see this. You know, remember we had our interest rates spike in America around that time. But nonetheless, you look at this chart all through, you know, around here, 1982 to 10 years, a little bit of growth. The next 10 years, again, a little bit more growth. And then something interesting happens around 2003-4. Which at the same time, our markets in America started going up and up and up and up to absurd levels in 2006. And this interesting thing has happened. There's 2008 and 2009 when they crashed. And then it picked right back up. We had some issues again, 2011, 10, 11, 12. That's when the low part of some of the market, at least in America. But not here in Canada. Look at this. Residential average sales prices. 77 to 2017. It gets absurd in 2003 and 4 roughly is when it starts. We're now in 2017. This is like 13, 14 years. Okay? Of absurd prices. And I would be willing to bet if this chart went back to the year 1900 or something, you would see a very stable, maybe not, you know, around the 29 crash, but after that, let's say, you'd see probably a pretty stable line all the way like 1977. It probably would say just barely creeping up. Then 71 happens, of course, gold standard, massive debt, U.S. dollar becomes the world's reserve currency. Banker bailout, we had the 1980s saving and loan scandal, which is the same thing that happened with the most recent banking scandal in the 2008 and 2009. Just these ones were massively bigger because they had these giant derivatives products that we didn't really have before. And as Warren Buffett calls them, weapons of financial mass destruction. And the Federal Reserve has just got to print. It's all it can do now. $4.5 trillion on its balance sheet. And then when the markets crash and the housing crashes, they'll never be able to get out of that balance sheet. We're going to have to buy even more garbage assets back. We'll have a $10 trillion balance sheet on the Federal Reserve. So to finish this off, in retrospect, perhaps Canada was lucky that the attempt to deflate the Vancouver housing bubble failed. Had it succeeded and spread across the nation, leading to a collapse in collateral values and widespread defaults, the mean reversion outcome may have been far more devastating, which of course is not to say that Canada's problem has been fixed, but at least for the time being, the can has been kicked once again. But if you looked at that chart that I just showed you, how much larger can that thing be kicked? I mean, even that chart, last chart, that little small one here. Real house prices surging in Canada, 1975 to current. I mean, look at this trend here. I mean, even the U.S., it's doing it again. You know, like I said, it's back to bubble time, like 2006. But look at Canada. It's out of control. There's so much hot money going over there. That when that thing implodes, you're going to find mansions. You are going to find mansions for pennies on the dollar. Again, Cliff High, Webbot. The high-end real estate market will implode massively first, then residential standard houses. You stand to find unbelievable deals if you could weather the storm and have some money to play with. And the money to play with might be your silver stash. It might be your Bitcoin stash. And when this time comes, when you need to play with that money because the prices of everything are crashing, that's probably going to be around the time when metals are sky high, precious metals, and Bitcoin and cryptocurrencies are also sky high. And you might be able to sell that and go scoop up a property or two or three if you want. Well, there's my whole family, my sister. Okay, yeah, Matt, we can do that. Or I could just rent them out to my family for dirt cheap. That kind of a thing. Who knows? But it can only end one way. This cannot continue. It's just like burning a house down. You start on this end, and it burns until it gets to the middle, and it's going to the left, and the whole second story. It's all... You had a fire over here that started, and everyone said, gosh, that fire sure is lasting long. The house still hasn't burned all the way down yet. And people are arguing over the time frame. Well, that's not a legitimate time frame. You know, some houses take such and such long to burn down all the way. This one's not. So what? They've got newer materials in here. They're kicking the can, so to speak, a little longer. But the house is going to burn down. That's the key here. All that massive debt has to be dealt with. We got to make the payment. Got to make that interest payment. We're never paying it down. The debt is not being paid down. The welfare state is getting larger. These fees are compounding, so to speak, on the backs of fewer and fewer working middle class and or whatever class, just people working, taxpayers. While the baby boomers are starting to retire, putting an even larger drain in fewer people to fill that gap to work and pay for all these bills. The only thing is when. How soon? That's the question. That's the key. It doesn't matter to me when. Because what I see in these charts and everything that I do when I do these videos, I'm seeing this can't go on too much longer. I've been pretty impressed with the club being able to kick this can and that can and that can again and then again. And you may say, well, they'll just keep doing it. They can't. There are certain mathematical equations, math doesn't lie, that says that cannot happen. Cannot happen. You can't have debt that keeps growing and never is paid down and say we can fix all this. The debt is unfixable. The liabilities, unfunded liabilities we have in this country, again, the ones that don't show you I just talked about, there's, 65 trillion or more, the real debt. Where's it coming from? We have GDP of, how many trillion every year? Well, if we have all this GDP I keep hearing about every year, we're the world's biggest economy. Why are we having to add another $1 trillion to the debt just to get us through to September now? Why? We have the GDP. We got the money. No? Exactly. I'm out. Take care.